those of you who are not familiar with himself, who is R.J. Miller, the sponsor of this series, he is on my right here. Distinguished dean of this school for 10 years between 1969 and 1979, and his legacy and his spirit and personality lives on, and we welcome him today. We're delighted he's here. I'm going to have a very brief introduction of our speaker today, but we are very fortunate to have him here. He not only is the first speaker who is not an American, the first chief financial officer we've had who's not an American. He also has traveled the longest distance to be here. He told me the trip from Buenos Aires took 24 hours, and he looks amazingly alert and with it, but we thank him for making that trip, Nicholas. His name is Nicholas Sakai, born in Buenos Aires. Graduated from the University of Buenos Aires in 1988. Well, he noticed that there were two graduates of the Stanford Business School that he knew from his Argentinian Stanford Business School graduate network, the Stanford Club there, named Marcos Galperin and Hernan Casa, class of 99, who were just getting started with MercadoLibre. And he went over to talk to them because he met them at some Stanford events in Buenos Aires, and he walked in the door to get some tips about how to get started with a new company, and they, of course, said, don't do that, why don't you come to work for us? We really need somebody just like you. Which he did, and the rest is history. Nicholas is the CFO of MercadoLibre. They went public in 2007 at $18. The stock has been validated in the stock market since then. It's currently trading at $52, and it's been a hugely successful company. It's now probably one of the 5 largest companies in Argentina in terms of market cap. Nicholas also is married to a Stanford alumna. Nicholas is going to talk to us about some of the challenges of being at MercadoLibre. I can't think of any speaker that we've ever had who perhaps has a wider band of experiences in terms of challenges that face people who work in finance. Currency risk, political risk, investment risk, operational risk, raising money, keeping track of the value. So Nicholas, I would just say we're delighted that you accepted our invitation to come to New York.
Providing tips is a very good business. Takes you to great jobs and even to marrying someone. So, okay, so welcome everybody. Thanks so much for being here. I'm going to talk about MercadoLibre, my 8 years there as a CFO, and basically what we have been doing, where we have come from, and where we are going towards. So basically, we started up in 1999. We became, over the years, the e-commerce and online payments leader in Latin America. We have built our management team through the Stanford network. We're going to see later on how many of our managers and executives are Stanford GSB graduates. And we completed a NASDAQ IPO in August of 2007, as George was saying. This timeline shows some of the major events throughout our 8 years of history. First, in August of 1999, we got started up. That was our logo. Back then, fortunately, we changed it. In May of 2000, we completed our last round of financing. We raised $55 million. This was towards the end of the good days and when the bubble had already burst, so it was quite tough to get this round closed. We had as our key investors Chase Capital Partners that later became JP Morgan Partners, Goldman Sachs, Hicks Muse, Banco Santander, and GE. And Hicks Muse is an interesting story because Jack introduced Marcos to John Muse in one of his classes. Marcos Galperin drove John Muse to the airport, and during that conversation he pitched the business, and towards the end of the conversation John Muse said to Marcos that he would be willing to invest in the company if he ever got the business started. So that was the first stage towards getting some money and getting the business initiated. In September of 2001, eBay acquired 19.5% of the company in exchange for an asset they had in Brazil called iBazaar, and also in exchange for a 5-year non-compete agreement and a best practice sharing agreement. All of this expired 18 months ago. In 2002, we acquired the assets of Locao, which was our only remaining local competitor in Brazil, and in that way we continued consolidating our business. In 2003, by then we became the undisputed leaders in the e-commerce space in Latin America. In 2004, we decided to enter the classifieds business segment and online payments. In 2005, we finally became profitable. That was our first year where we had positive numbers. And towards the end of that year, we acquired the Remate, who was our only regional remaining competitor. The history of us relative to the Remate is quite interesting. It has many commonalities and also many differences. The Remate is a company that had gotten started at about the same time as we were, out of Buenos Aires by a bunch of Harvard MBAs. And they also raised a lot of money. They even raised more cash than we did, and they expanded regionally as we had done. However, they had a very different strategy. They focused more on mass marketing and on rapidly building scale, while we were focusing more on building a great technology and building an organization that could be sustainable for the medium and long term. When we acquired the Remate in 2005, they had burned all their cash. They were not profitable yet, and their market share was a fraction of ours. So maybe the Stanford, Harvard is what made the difference. At least that's what we thought for quite some time. In 2006, we finally achieved the $1 billion mark in terms of gross merchandise volume transacted on our platform. You're going to see some slides where we see the trends. This number was a few dollars when we got started. So when we achieved $1 billion, it was a very important moment for us. And at that time, we also entered the Caribbean and Central America and completed the 12 countries that we currently manage. And in August of 2007, we finalized our IPO in the NASDAQ. So we basically believe that we were able to complete our IPO for 4 different factors that we think enabled us to get there. The first one is that we operate in a large and growing market, both in terms of GDP and in terms of internet penetration. The second one is that we are the e-commerce leaders in the whole continent, and we run 4 synergistic businesses. We have a very experienced team, and we have built our own technology that is really superb and provides a great competitive advantage. And last, we have a solid track record of financial performance. So in the next slides, I'm going to spend some more time speaking about each one of these factors that we believe enabled us to be an attractive company when we approach investors. So in terms of Latin America overall, it's a continent with 550 million people, 9% of the world's population. In terms of GDP, if we put Latin America together, it's the 3rd largest in the world. It's even larger than China. And we think that for us it makes sense to look at Latin America as a block because we operate in the countries that make up more than 95% of the region's GDP. In terms of number of internet users, there are 126 million users in the region. As you can see in the graph, it's less than what you see in Asia, Europe, and North America. But interestingly, it is growing faster in Latin America than anywhere else in the world. And when you look at penetration, it's 22% in Latin America. When we were starting the business, this was like 2 or 3%. So obviously at that time, we believed that it made more sense to focus on building a great technology than on spending massive amounts of cash in mass marketing, which would reach no one that was online at the time. Interestingly, when you look at this 22% overall, it is driven by Brazil and Mexico that have a 22% penetration. We believe that over the next years, we will have a lot of growth ahead of us as Brazil and Mexico catch up relative to Argentina and Chile that are already at 40% penetration. And we believe that over the next 5 to 10 years, Latin America as a whole will converge to the rates of penetration that we see in Europe or the US. In terms of broadband, there are only 11 million households with broadband in Latin America. So this is really a small number. Even though it's growing faster in Latin America than anywhere else in the world, we see this as a small number. However, we think this is a glass half full type of situation because we have already achieved a sizable business with this amount of broadband accounts. As this grows over the years, this will drive our business in terms of volume and size. We are the e-commerce leaders in the region overall, but we're also the e-commerce leaders in each one of the countries where we operate, if you look at them separately. We think this is quite unique because when we look around in other industries, for example, retail, Walmart is huge in Mexico, but they are not the leaders in Brazil, where Carrefour is number one. Consumer goods, Procter & Gamble is the leader in a few countries, Unilever in others. We are the leaders in each one of the countries where we operate, so that is really a very strong asset that we have in our favor. We have experienced increasing diversification across geographies and business segments over the years. Even though the business got started out of Argentina, Brazil is our larger market. In 2007, 59% of our revenues were generated in Brazil, 15% in Argentina, and 13% in Mexico, and 13% in the others group of 9 countries. Interestingly, this others group is the one that is growing the faster for us. And in terms of business segments, we operate 4 synergistic businesses. Our marketplace, that's how we got started, classifieds, advertising, and online payments. So let me spend a few minutes now on each one of our segments to give you a sense of what we do and where we are and what the opportunities are. The marketplace, we are the largest e-commerce player in Latin America through our marketplace. We're the number 1 site in terms of traffic. We have a very wide breadth of listings on products on our site. We have products in more than 2,000 categories. 80% of the items sold on our platform are new items, and 90% are sold at a fixed price. So in many ways, we have a lot in common with the eBay business model. People typically think about MercadoLibre as an eBay type of company, but we also have a lot in common with the Amazon marketplace, where most of the products sold are fixed priced. We have also developed many innovative features, for example, a proprietary sorting algorithm that allows us to find within our almost infinite inventory the product that best matches what the buyer is looking for. That provides a great buying experience and has worked very well for us. This, in many ways, has a lot in common with the Google search engine. Our second segment is classifieds. We launched this in 2004. Today, we're the largest classifieds site online for the motors category in terms of daily visitors and individual sellers. We're growing our share of the dealer segment. There are some local sites in every country that have attracted dealers to list online. We are growing our share by our own efforts, but we're also trying to buy some of these competitors. And for example, in January of 2008, we acquired a company called Tucarro that was the leader in Colombia, Venezuela, and a few other countries in this segment. So we are trying to consolidate this by ourselves or through M&A whenever possible. We're also pursuing opportunities in real estate and in services under the umbrella of our classifieds platform. The third segment is advertising. this for us is less than 1%, or was at the time of the IPO less than 1% of our revenue, so this is not very significant. But we are really focusing on this. We believe we have a great opportunity. We're the 5th most visited site in Latin America, behind Microsoft, Google, Yahoo, and Terra Networks. So we have the type of traffic that a portal has, but we haven't really leveraged this. They are getting substantially more amounts of advertising revenues than we do. So we're really focusing on this. We found out the other day that we are a top 50 site in the world in terms of traffic. So we were quite amazed to see that. Our last segment is online payments. This is a key enabler of online transactions, so it's great for our marketplace, but it's also a great business per se. We believe whenever we think about payments that the opportunity here is as large or even larger than the opportunity that we saw for the marketplace way back in 1999. We have a lot of upside potential as we increase transactions within our platform. Whenever someone wants to pay, a buyer wants to pay a seller, can use our payments product, Mercado Pago. This represented 10% of the volume closed on the transaction last year. And just as a reference, PayPal on eBay represents 60%. PayPal on eBay in the US represents 90% of the transactions. PayPal and eBay have announced a few weeks ago that in Australia, eBay would force that all transactions are closed using PayPal. So in our case, that's only 10%. We have a substantial opportunity to drive this upwards. Also, we're expanding transactions outside of the MercadoLibre platform. We are now in the process of rolling out a new version of our payments product that allows for people to pay each other for transactions that do not happen on MercadoLibre, the same way that you can do that with PayPal. And for PayPal, that is a business that is as large as the business on eBay. So this is another great opportunity. And the last one is consumer financing. Through our payments product, we're offering consumer financing whenever someone wants to buy a laptop or something. He or she can pay it over 12 installments or 24 installments or 6 installments. And this is something that we're already doing, and we're in the process of really upgrading and taking this to a better level. So all of this we see as great opportunities. One day we would love to see payments being as big or bigger than the marketplace business. We talked a little bit about the team before. These are pictures, I think, from 1999 or 2000. So we all look much older today. Actually, we took new pictures a few weeks ago, but we're still using the old ones. So you can see here that we really leverage the Stanford connections. Our CEO, myself, COO, country manager in Brazil, head of payments, country manager in Mexico, and head of sales are all Stanford grads from different years. Everybody also brought very solid backgrounds from prior to coming to MercadoLibre. And so that is really a point in pride in our company. I think this is an interesting picture. It basically shows how almost everybody joined the company at around these days when the market was going upwards. The sky was the limit. Then everything collapsed. But everybody remained on board. The team that had started the company remained on board, and we think that's a very strong reflection on the belief in the long-term opportunity. Markets come and go, but the business was there, the opportunity was there, and everybody stayed on board. So this is also something that is quite interesting. The tenure, when you look at the managers that I showed in the prior slide, everybody has 8-9 years with MercadoLibre. And we went only not through this financial crisis or crisis in the markets, but also through pretty tough times in the different economies throughout the years. So far I have talked about the factors that we believe enabled us to become a public company. So we talked about the size of the market, our leadership position, our team. The last part, which is also very important, is our financial track record. Back in 1999 or 2000, when many companies were trying to go public without revenues or without profits, I think the picture is quite different for us in 2007 than what it was for many of these companies back 7 or 8 years ago. So starting with our user base, and this is from where everything gets started, we closed last year with 25 million registered users. And you can probably see that since 1999 through 2004, we had added here 6 million users. In the next year, we added 6 million users per year every year. So there's a lot of users that are coming online. Obviously, that helps our business a lot. But still, this is a fraction of the 126 million users that are currently online in Latin America, and that was 22% of the total population. So we think there are a lot of forces that are going to help us and support us as we move forward. GMV, this is the amount of goods that are transacted on our platform. As we have said, we achieved the $1 billion mark in 2006. Last year, we did $1.5 billion in gross merchandise volume, so growing consistently over time. The payments volume was $158 million last year, and this is the 10-11% penetration that I was talking about before. $158 million of the $1.5 billion are closed with people using our payments product. We hope that this number one day is going to be as large as the gross merchandise volume number, or even larger as we get transactions off the MercadoLibre platform. The take rate is defined as our revenues divided by our gross merchandise volume. It has been evolving over time from 3% to almost 6%. When we benchmark against eBay, this is half the rate that they have. So we believe also we have an opportunity to get more money out of our systems and our transactions. However, we're doing this very cautiously because we really understand that the internet is in its very early stages. In Latin America, we want to make sure that we offer a very compelling economic proposition to our sellers. We do not want to price ahead of ourselves. Revenues, as a result of the volume and as a result of the take rate, have been growing consistently. $85 million last year from a very small number 5 years ago. Gross margins around 80-78%, quite consistent over time. So this is a very high gross margin operation. Expenses, we have really experienced a tremendous scaling of our infrastructure. I don't want to talk about 2002. That's expenses as a percentage of revenue. So I will skip 02, 03, 04. And by 05, our expenses represented 75% of our revenues. In 06, 66%, and in 07, 53%. So this has been a great driver of our margins as we have been able to scale the business without adding a lot of incremental expenses. As a result of all this, our EBIT margin has been growing very consistently. We were not making money in 02, 03, 04. By 05, we started to make money. We became break-even. And then in 06, our margin was 10%, our EBIT margin. And in 07, it was 25% EBIT margin. And we still believe that as we go forward, we can continue to drive the revenues faster than our expenses and continue to drive the margin upwards. By the same token, we understand that we need to invest in the business, so we want to be very careful and not drive the margins too far too soon. Net income, also breaking even in 05, making $10 million in 07. And this is a business without CapEx. So therefore, our profits in our P&L convert very, very nicely to cash profits. So wrapping up the financial trend and track record, this is a slide that we like to show, and it reflects on the trends for the last 5 years combined. You can see here how our revenues have grown at a CAGR of 119% per year for the last 5 years. Our GMV, 94%, our COGS, 94%, and our operating expenses, 59%, therefore driving our EBIT margins and our cash generation upwards throughout this time period. I would like to spend a few minutes now on the IPO process per se. These were the factors that enabled us to become an attractive company to go and raise capital in the markets. But once you decide that you want to go and do that, you have to go through a process that was quite lengthy and complex. So the first thing that we did when we decided that we wanted to go public was to choose banks and legal advisors. We did this after a very extensive process. We talked to almost every investment bank and almost every law firm. And we decided to go with JP Morgan and Merrill Lynch. We then had to define the market in which we were going to trade, and we looked at the US markets, the NYSE and the NASDAQ. We also looked at markets in Europe and markets in Latin America. We decided that we wanted to trade where our peers were trading, that was the NASDAQ. And also, given that we were a Delaware company since the very beginning, it made a lot of sense for us to do it in the US, because if not, it would have required some restructurings. It could have had some tax implications. So it made sense to do this in the US with in the NASDAQ. We then had to prepare the information in the way that a public company is required to present its financials. We had done some work in the prior years. Fortunately, given that we had sophisticated US investors since day one, we had PwC audits, we had US GAAP reporting since the very beginning. In 2005, we implemented SAP systems. We centralized all the accounting. So we were a few steps ahead of the game, but we still had to work a lot to get everything up to the standards required of a US public company. We are a Delaware company, so therefore we trade as a US. We're a domestic filer. We are not a foreign filer in the US. Obviously, we had to work on upgrading our systems and controls, particularly under the new Sarbanes-Oxley environment. So we have been working on that, and that remains a work in progress. The whole organization is working behind these initiatives. We had to grow our team, not only in quantity, but particularly in skills, upgrade the skills we had in the team. And after we had all that done, we finally filed our S-1, our prospectus, in May of 2007. We launched the roadshow in July. We began trading in August of 2007. These are a couple of pictures of a very, very happy day. We are smiling like this. We had to buy suits and ties because we were not using suits and ties for the last 8 years. And the ones that we had from the time we were doing jobs interviews here did not fit anymore. But it was really interesting. After 2 very extensive weeks of hard work, we finally priced the day before we went public, in a day that the Dow Jones had gone down 400 points. This was the beginning of the real estate and the mortgages crisis. So every day we were walking into an office of a potential investor, and we were looking at the screens, and the Dow was up 200 points, down 500 points. The day that we priced, it was down 400 points. The day that we priced was the first day since September 11 that the Fed, the central bank in Japan, and the European Central Bank had to inject liquidity into the system. So tough day, but still, the day we priced, we went up, you can see there, 56.9% to $28.25. So it was an extremely successful IPO despite very, very tough market conditions. So basically, and trying to wrap up, we think that we have accomplished a lot, but we are only seeing the tip of the iceberg in terms of the opportunity. The internet is growing very fast. We are uniquely positioned to capture all the great opportunities that we see ahead, particularly as we look at what we can do in the core marketplace, in our payments business, in our classifieds business, in our advertising business, consumer financing, and through M&A. So we're very excited for what we've done so far, more excited for what we can do going forward.